Welcome, everyone. I'm Carol Dewey, founder of Perpetual Wealth Financial, and I want to thank you for joining me live today. Over the past few weeks, we've been navigating some major shifts in the market: tariffs, trade deals, and economic uncertainty. But today, we're turning our attention to something equally transformative: the rapid rise of artificial intelligence, and more specifically, how investors like us can position ourselves as we approach the era of artificial general intelligence, or AGI. In today's session, I'm going to walk you through 3 powerful ways to invest in AI's next phase, from the core technologies powering it to stealth opportunities that may be hiding in plain sight. If you're wondering where the real opportunities are in the AI revolution and how to stay ahead of the curve, this conversation today is for you. So let's go ahead and dive in. Today, every company faces an evolutionary imperative. Rapid technological change driven by breakthroughs in artificial intelligence means businesses must either adapt or go extinct. In December 1831, 22-year-old Charles Darwin embarked on the HMS Beagle to survey the coast of South America as the ship's naturalist. It was during this 5-year voyage that Darwin famously developed the theory of evolution by natural selection. This survival of the fittest concept refers to the idea that individuals with traits best suited to their environment are most likely to survive and pass those advantageous traits to their offspring. The same theory can be applied to every business in the world. And the stakes have never been higher because the pace of change is more rapid than anyone could have imagined. The companies that adapt quickly will be the new kings of the market. Those that refuse to adapt or simply are slow to change will go the way of the dodo bird. As we reach the final stretches of the road to artificial general intelligence, or AGI, every company on the planet now faces the Darwinian prospect to adapt or perish. AGI is when AI achieves human-level intelligence and can perform tasks all on its own. This technology is coming. In fact, OpenAI CEO Sam Altman said in January that the company already knows how to build AGI. For investors, this changes everything. A company's relationship with AGI is the lens through which investors now must view all stocks. And the companies that hope to survive and thrive must adopt and integrate AI technologies as quickly as possible. Those that fail to do so will perish, and time is of the essence. That is why I've looked to the experts and found a 3-step process for finding companies that will survive and thrive on the road to AGI. And I'm going to share those 3 steps with you here today. In fact, I believe the stocks this process reveals are really likely the only companies we should invest in for the foreseeable future. The imminent arrival of AGI within the next 12 to 24 months puts us all in the crossroads right now. So let's go ahead and dive in. Step 1, invest in AGI. Sounds pretty reasonable and obvious. This simply means buying shares of companies that are providing key parts of the infrastructure that will accelerate AI technology toward AGI. Consider AI chip companies. They fit squarely into the investing in AGI category because they supply the immense amount of computational power that AGI requires. When I first started talking about the road to AGI less than a year ago, the AI chip market was projected to hit $341 billion in 10 years. It is now projected to hit $501 billion in only 8 years. Of course, any keen investor will want in on that $501 billion, but cashing in on that growth directly won't be easy. There is massive competition in the AI chip race, and names like NVIDIA and Supermicrocomputer, which develop AI-focused GPUs and servers respectively, probably come to mind first. However, if you break down an AGI chip of the future into its components, you're likely to find the same exact raw materials regardless of the manufacturer. So in my investing in AGI approach, I would look at the companies that provide key parts of the infrastructure that will accelerate AI technology toward AGI. like the core group of precious metals inside each chip, instead of their highly valued producers. Now, step 2, invest alongside AGI. This means getting in on the companies primed to rise in tandem with AGI. Now, I worry that too many folks have bought into a story that the only way to build AI wealth is to go overweight into the technology itself, like the AI chip and software stocks. But by investing alongside AGI, we get a more thoughtful path to building wealth with potentially far less risk. Let's look at data centers, for example. To achieve AGI, we need a lot of data centers to house all of its computing power. In fact, NVIDIA CEO Jensen Huang predicts $1 trillion will be spent over 4 years on AI data centers. Most of that money will come from Amazon, Alphabet, Microsoft, and Meta platforms. These data centers are being built on land across the country. In Vint Hill, Virginia, for example, the price of the land where a data center is going to be built has over the past few years soared 10 times in value. So in this case, investing alongside AGI would mean investing in the industries that provide the physical infrastructure and building blocks of AGI facilities. I'm talking about companies that provide the raw land that will house data centers, or the systems that cool the centers, or even the energy sources that power them, or all of them at once. Now, step 3 is invest in stealth AGI. This means investing in non-tech companies that will adopt and apply AI with the goal of reaping huge gains in efficiency, productivity, and profits. Stealth AGI industries include shipping and logistics, beauty, fashion, and wellness, and even food and beverage. These are companies that might even be considered a little boring, especially compared to headline grabbers like NVIDIA. However, these less exciting names will adopt AI and AGI in a bid to become more profitable, often by orders of magnitude. Biotech is a sector in the stealth AGI category that I see a bright future for. That's because AI in biotech is speeding up how we discover new drugs, making treatments way more personalized, and helping us predict diseases before they even show up. So what does survival of the fittest AGI style look like? Well, it's the companies that are set to ride profit waves of AGI, and these are the ones that are building or providing the materials for AI hardware and software, riding its rising tide like data center real estate companies, or applying AI into their products and services like biotech firms. Everything that falls outside these categories is either too risky or on its way out. That is why I believe that the stocks within these 3 categories of AI investment are good bets to buy right now. I want to thank you again for joining me today. I hope this session gave you a clear picture of where AI is headed, and more importantly, how you can position yourself and your portfolio to benefit from this historic shift. As we've seen, there are smart strategic ways to invest in the rise of AGI, whether through infrastructure, supportive sectors, or even industries quietly integrating AI behind the scenes. And remember, just like we've discussed in past weeks with tariffs and trade policy, the key to smart investing is understanding what's coming and being ready for it. If you like to talk one-on-one about how these AI strategies might fit into your retirement plan, I'd love to hear from you. You can schedule a time with me directly or visit www.perpetualwealthfinancial.com for more information. Until next time, I'm Carol Dewey. Thanks again for spending this time with me, and I look forward to helping you navigate your abundant retirement. See you next week.